Welcome back everyone, this is the Market Talkers weekly strategy video. My name is Dee, this is Bob. Now this is the second week of August 2021 and that means summer trading. It's the time of the year when you really need to pay attention to what you're trading because some asset classes tend to completely dry up. For example, Forex. So if you're just a Forex trader and you're wondering why you haven't been able to get any good positions, that's why. In the summer, especially in August, I tend to focus on commodities and equity indices even more than I do throughout the rest of the year. So today, let's have a look at institutional order flow, the bird's eye view of crude oil and S&P 500. Crude oil monthly chart. Previous month isn't really telling me much, and this month is still developing, so I cannot give you any candle patterns because this current candle is still subject to change. It looks like a bearish engulfing now, but obviously that can rapidly change in a product such as crude oil. Weekly chart has a newly formed bearish engulfing with its conterminous line at 72.27. Conterminous lines are my concept. They represent areas that might turn into future supply and demands, but for now they're just like key levels of interest that may get retested and then they may give a move in the same direction. Daily chart, new Q points, new swing extreme. Today, Monday, price has already tested quite deep into the swing extreme, and that's an indication that this short move is quite strong. But let's also have a look at the day time frame and profile sentiment. That's going to give me an idea of what the appropriate strategy is for today. Okay, so I've done the weekly strategy, definitely expecting shorts, but let's just look at the day time frame. Now the day time frame, price open NYMEX quite far away from Friday's trading area. And that almost always means some kind of a mean reversion move opportunity, which is what's happening now. Once the institutional market participants get closer to kind of closing the gap that we had at open, then I can look for continued short moves because of the massive bearish engulfing that we have on the weekly chart. Some of the key levels where I'd like to see this happening, this kind of a reversal happening intraday, is around either the value area low, or if that's too far away, when the price exceeds some kind of statistical range average. So neither of these has actually happened yet. Assuming that the market participants with deep pockets don't probe below this range that we're establishing during the first hour of NYMEX, then there's a good chance of a momentum trade upside. Now, if they do extend the first hour's range to the downside, that's going to limit any upside potential for the day. In that case, I would probably prefer to see a continued move down, but to me, because of the open sentiment, that's a less favorable and a lower odds outcome. So a couple of obvious scenarios for today is either a sustained move higher and then a reversal somewhere sort of in this area. So that's where I would like to see some sellers appear. All right, moving on to S&P 500 futures. Monthly chart, bullish. That's it. Analysis done. No, just joking. So let's have a look at the weekly chart. Weekly chart has this nearby conterminous line of demand. They're kind of creating this entire staircase move up, slow down, then move up, then slow down. That's been the theme all along for the last kind of few weeks. So only when one of these speed bumps breaks and the price closes below them, maybe I'll consider changing the overall weekly plan to include longer term shorts. But for now, as a general strategy, I remain long biased. Let's have a look at the daily chart. Daily chart has a bit of a bearish engulfing here, but there's so many congestion areas on the way. I don't really see shorts having much space to fall very far. You have these like demands on top of demands, and that's usually very tough to break in one go. Now for the intraday time frame, today prices have opened inside yesterday's value area. And it looks like the first hour of trading is going to be quite large as well. So I'm literally just looking at the first half hour of New York Stock Exchange, and they've already gone through like 15 handles. Now both of those conditions, opening inside Friday's trading range and then also having a very large initial balance today, that's indicative of responsive activity. So personally, I would probably wait for a better day to get involved in S&P for this week. Whenever you have a day like this, I tend to expect lots of fake outs and reversals. So if I'm absolutely itching to like get a trade out of this, I would probably focus around swing extremes, preferably to include either a daily or session average levels. I don't really see anything else here particularly obvious, so I'm going to wrap this up. Short and sweet, that's it for the weekly plan and some intraday overview of crude oil and S&P 500. If you found it useful, click on the like button and leave a short comment as well for the YouTube algorithm. And I'll see you guys next time.